Alright, so hello, good morning to everyone. So let's have our quick daily briefing for today. And to start things off, here's what happened on the New Zealand dollar yesterday, since one of the key data last night is the interest rate decision. So as you can see here, the previous data for the interest rate decision is 0.25%, and the forecast was 0.50%. So basically, the New Zealand government or the central bank in the New Zealand, they are planning to have a rate hike for about 0.50%, which is higher on the previous one at about 0.25%. But just in case you didn't know, the New Zealand government shut down their economy for 3 days due to the one COVID case the following week. Since the past few months, the New Zealand economy is doing good. They've prevented the outbreak of COVID. But prior to the decision, they've also announced that they've had 6 new cases. And as a result, right after the statement or the RBNC statement, the market immediately reacted on the New Zealand dollar. So right here, as you can see, the New Zealand dollar made a strong decline from 0.69 territory down to 0.6850. And the rest of the session yesterday, you can see here that the momentum on the bearish side still remains on the New Zealand dollar against the USD. And as of this moment, during the US session, the price of New Zealand dollar still remains at 0.60 or 0.6850 level. And next thing we have the consumer price index for UK yearly basis for July. So the previous data was 2.5% and forecasted at 2.2%. And for the actual data, 2%. So lower than the forecasted. And also we have the CPI data for Eurozone yearly basis for July as well. So previous and forecasted, still the same at 2.2%. And for the yearly basis, the CPI data for Eurozone still unchanged at 2.2%. You also have CPI data for Canada. So the previous data was 2.7%. And the forecast is slightly higher, which is 2.8%. And for the actual data, it was 3.3%. So this one did not create any significant move since the US sentiment is strong for this week. And also we have the crude oil or weekly crude oil stock exchange. So the previous data is negative 0.447 million and forecasted at negative 1.055. And for the actual data, it's negative 3.234 million. And for today's economic data, during the Asian session, we have the employment change for July for Australia. So previous data was 29.1K and forecast at negative 46.2. And for the actual data, it was 2.20K. So it beats the market forecast as well. And the unemployment rate for Australia as well for the month of July. So the previous data was 4.9% and forecasted at 5%. And for the actual data, it beats the market forecast at 4.6%. So let's take a look on some charts right after the FOMC report last night at 2 a.m. in the morning. So a moment, let me just share my MT4. So first thing, as you can see here on the gold, or sorry, the GB against the dollar. So during the 1-hour chart, as you can see here, there's a strong decline momentum for the pound dollar, all the way to 1.37 territory. Same goes with the euro dollar. Right after the FOMC, did not benefit from there. So the price goes down all the way to 1.1664 level, but currently it's on the 1.1674. And also the Aussie dollar, it created a monthly low of 0.7203. So the previous low for the month was right here around the 72.87 level, but right here created a new monthly low of 0.7190 due to the sentiment for the dollar. And right here, the USD Cad benefited from the data for the FOMC report last night. So as you can see here, the momentum for the USD Cad is strong on the upside all the way here. So the current price is around the 1.2688, and it made a rise above all the way here from 1.26 up to 1.2688. And also the New Zealand dollar still on the bearish momentum. So last night, since the FOMC report was already released, so the main point of that report is they've discussed the Fed tapering by the end of the year. So if we're going to define the tapering word or taper in the financial terminologies, it's actually a process of gradually or lessening something. So it means the government or the US government, they're going to reduce the bond purchases by the end of the year, or bonds. It's typically a debt for the government that they use for infrastructure plan. So the more they spend money, of course, the value or the demand of the dollar will go weaker. But if they lessen the spending by the end of the year, of course, the value of the dollar will go up. So that is why right after the FOMC, a lot of currencies are benefited, or some of the currencies are affected right after that data. So we can still expect by the week or the next week, if they still have this tapering issue or tapering of spending or stimulus by the end of the year, so we can still expect that the value of the US dollar will still remain on the upside. And same goes with gold. As you can see here, the current price of gold is around the 1779 per ounce. So last night, after the FOMC, right here, declines all the way here above the or below the 1770 for about 94 pips. But on the previous session, the price of gold is still stagnant or did not create any significant move. So the price was actually steady. It was traded back and forth around the 1780 and then all the way to 1786, and then goes up again to 1780 territory. But as you can see here on the Asian session, still on the decline below the 1770 level. And also oil. So you can see here, the price of oil declines below the 64 per barrel due to the stock exchange earlier. So the demand is actually high. So it means majority of the countries are not using oil as of this moment. So that is why the price of oil declines 64.34 per barrel. And during the European session, we have to focus on the trade balance by Switzerland for the month of July. And we also have imports and exports monthly basis for July, Switzerland as well, later at 2 p.m. And for the US session, we have to focus on the weekly initial jobless claims. And for Canada, we have ADP employment change, both data later at 8:30 p.m. And for our key product for today, we have the USD against the Canadian dollar. So the USD Cad is actually up for almost 4 consecutive days, from Monday to Thursdays, still on the upside due to the strong sentiment for the dollar. So definitely this pair benefited from that. But for today's support, we can look for 1.2612 and 1.2573. And currently, it's approaching our second resistance at 1.27, and the other resistance below that is 1.2676. Again, for the European session, we have trade balance for Switzerland for the month of July, imports and exports monthly basis for July as well, and US session, the weekly initial jobless claims for US and Canada ADP employment change. So overall, if you are trading, especially those currencies that are paired by the US dollar, you need to be cautious for some announcements or any high impact news that can affect your trade. So please put a proper risk management and be cautious as well. All right, so that's all for our daily briefing today. Thank you everyone for joining. Please stay safe and have a great day.